Good day, Element traders. So this whole series is going to be focused on helping you to understand the markets better, to have a grasp of what the market is about, how it works, and just be able to start getting yourself involved in the trading. So what I have down here is all of my notes that I want to share with you guys, and it's just a starting basis. So before I get started, this whole video series is going to be a free content-based thing that we give you just to get you started. Anything that you don't know, we want to help you to understand what the market is about and how to get yourself involved, how to get yourself moving forward. So with that being said, basically what we're going to focus on is the Forex market, the introduction towards it. What is the Forex market? How does it work? Who's involved? Why is it flowing? What is happening with it on a day-to-day basis? When does it start? When does it end? Second video that we're going to start doing is going to be understanding currency exchanges, the bulls, the bears, a bullish market, a bearish market, market structure, and also how the market flows. Then the third video in this series is going to be focused on the candles, pips, leverage, lot sizes, and also a little bit of risk management. So that's also going to be in terms of how does the candles work? What does the candles mean? Why is the candles there? Secondly is the pips. What is pips? How do you measure pips? Then also leverage. What is the leverage that you want to use? How do you calculate your leverage according to your account size to be able to trade? Lot sizes. What is the lot size you need in relation to your account size, your equity that you're holding with proper risk management? So that's the third video. The fourth video is going to be focused on market structure, how to identify market structure, how to work with market structure. What is the things that will help you to trade better? And then the fifth video is going to be focused on technicals and fundamentals. What's the difference between the technicals of trading and the fundamentals of trading? How to do technical analysis, how to do fundamental analysis. Both sides we're going to cover for you guys. And that's the start. That's the first 5 videos that we're going to start helping you guys with understanding the market. So as I said, the first video, this is the introduction to the Forex market. So basically, when you start trading, you want to be simplifying. Less is more for you. Being able to trade one pair in the market is the best thing that you can do. You can focus on it, you can flow with it, you can see what it's doing, and you can trade accordingly. But if you have 3, 5 pairs on the screen, you're going to try to understand 5 different things that's happening at the same time. Being able to monitor and adjust stop losses and take profit on 5 different trades or 5 different currencies is very difficult to do. So basically, what I want to do is integrate this with other markets. So whenever you take profit out of the currency market, where do you invest it? Where do you push the money into? Now, following on is that's the basic principles that I want you to follow, is to keep to one pair, study it, backtest it, see what it's doing, how does it respond, does it work on structure, does it work on a break of structure, retest, does it work on resistance support, what does it work on, what is the best possible way that you can find to trade that currency. Now, the next thing is your routine. Now, you have to set for yourself a specific routine to analyze the market. When you're trying to analyze, if you are going to trade the London session, analyze the markets before the London session. If you're going to trade the New York session, before the New York session. Asian, same thing. Now, what you need to realize is the Forex market is the biggest market in the world. There's about anything from $5 trillion to $9 trillion flowing through it every single day. Now, that money varies. And the best strategy that I found is keeping it simple. If you overcomplicate things and you have too much chart work, meaning too much technical analysis on your charts, it's very difficult to understand what you're supposed to do. You want to know where to enter and where to exit. Simple as that. Now, the banks are the major movers. They are the biggest players in this Forex game. They control majority of the market flow. Where does price go into? When does it turn? When does it go bullish? When does it go bearish? So we want to study what the banks, the institutions are doing. Now, trust me, Forex is not an easy game. It's a one-man game. It's not something that you can just quickly learn and start doing. It's going to take time. And it's something that requires you to be patient, and disciplined. Now, one thing you need to understand is you need to respect how the market flows. You can't be saying, listen, this is how the market's going to work and this is how you're supposed to trade. You're supposed to study what the markets are doing and being able to put a trading plan in place to be able to trade according to how the banks move the money. You can't be saying this is how it's going to move. That's not how it works. You need to respond to what the market is doing. So that comes to something very vital: mindset and psychology. If your mindset is right, you're trading with the trend, you're trading with the banks, you're going to be in for a good run. But if you're going to go do your own thing and try to focus on what retail traders are doing, what this trader is doing, what that trader is doing, you're going to have a long learning curve before you actually get to the point of understanding. Just focus on the institutions. They are actually moving the money. It's called the foreign exchange market. It's one currency against the next. So who's going to move the currencies? The banks. So with that being considered, Forex is a one-player game. So you are responsible. You are 100% responsible for your own trades that you take. You are the master of this one market, and it's the only market you need to focus on. If you're going to focus on different markets, also your mind is going to be scattered. You're not going to be able to focus on one thing. So that being said, that is Forex explained in a nutshell, so to say. So a little bit on the Forex language. You have longs, shorts. Longs means you want to look for buyers. The market is going up. It's bearish. It's hawkish. That's the terminology used in relation to it. If the market is short, you sell it, which means it is dovish. It is on a downtrend. Now, why do I go into the terminology? Because you need to know what market you're trading. Are you trading a bullish market or bearish market? So if you're trading a bullish market, that means the market's going up. You want to enter buys. If you're trading a bearish market, means the market is falling down. You want to enter sells accordingly. So this is the introduction to the Forex market. Now, what is the major key players in this game? It is London, New York, and Tokyo. Those are the three major sessions that plays from Monday to Friday. So Sunday evening at 12 o'clock, that's when the markets open. And then Friday evening at 9 o'clock local South African time, 10 o'clock, that's when the markets close again. That's when the New York closure happens. The Asia Open happens Sunday evening, 12 o'clock, so it's Monday morning. And then the markets play from the start through to the end of the week. And it cycles every single week. The markets are open 5 days a week, literally the whole time. Now, you need to identify who is the biggest players in the game. London. London provides the most liquidity in the market. It's the highest liquidity session with the lowest spreads, and it's the biggest session that there is. And that normally creates a huge uptrend or downtrend. They decide where the market is going for the day, majority of the time. Then secondly, you have the New York session. New York session is the second biggest player in the Forex exchange. Now, you need to know that 85% is going with the dollar. Now, when the New York session opens, that gives you a whole indication of they take control. They decide if the trend is going with the London session or it's going to turn in reverse. Is it continue bulling or is it going to continue bearing? You need to see what happens in the New York session. Now, New York session is one of them, is the popular session, and also you have the highest chance of reversals in the New York session. Go study the charts and you'll see it. And then the third session is the Asian session. The Asian session is the last session. It's normally in South African time. It's in the evening. If you in the New York session, normally it follows up with the New York session. London session, normally when the London session starts, that's when the Tokyo session ends. Now, Tokyo is the third largest player in the game, and it is mainly focused on the yen pairs. So anything related to Japanese yen is normally better consideration in terms of trading that time. It's the smallest, thinnest movements that happen in that time. And also it has the highest spread. It's a very slow market. It's a very slow session, meaning when you're trying to trade it, it's better for intraday trades. When you're looking for a day to a swing trade entries, New York, London is the better. So What's the things that you need to consider when starting to trade? You need to identify what is your personality. Are you someone who is patient? Are you someone who can wait for your profit to be taken out? Meaning you holding your trade anything from 8 hours plus. Because if that is so, you are going to be more of a day trader. If you're not patient, you're going to be intraday trader. You want to be in and out of the market within 4 hours. You want to be within a session taking profit. Now, if you are someone who's very patient, you can hold a position for a long time, you are going to swing, meaning you're going to hold a trade anything from days to weeks, even months, if you can hold that long. So on to the next video, we are going to continue with the series, and every single video is going to be focused on a specific topic of choice. This is the first one. This is the introduction to the Forex market. Hope you guys enjoyed it. And then look out for the next video.